Hello students, how are you all? I hope you are doing well. In this video, I am going to explain CA Foundation Accounting Mock Test Paper Series 1. Is it clear students? Yes. So I hope you have seen all this MTP. So here I will try to quickly complete the video by explaining important aspects or important concepts. Okay, now look at first one. As usual, we know we get 6 true or false statements. Now first one is a claim that an enterprise is pursuing through legal process where the outcome is uncertain is a contingent liability. See here the organization is pursuing a claim. So it becomes contingent asset for organization. So here the statement is false. Next one. The effect of errors committed cancelled out. The errors will be called compensating errors and the trial balance will disagree. See, yeah, if the effect of errors committed cancelled out, they are called compensating errors, but the trial balance will agree. But here they have given disagree, so it is false. Yes or no, students? So here we have answers also. You can next one. Stock at the end appears in the trial balance is taken only to the balance sheet. See, if the closing stock appears outside the trial balance, that means in the adjustment, it is taken to trading account credit side at the same time balance sheet asset side, but here they said stock already appearing in the trial balance, so it is directly taken to the balance sheet asset side, so the given statement is true. Next one, reissue of forfeited shares is allotment of shares but not a sale. This false now, because reissue of shares is not allotment of fresh shares, it is simply a sale of old shares. Is it clear students? Next one, both revenue and capital nature transaction. Both revenue and capital nature transactions are recorded in the receipts and payments account. Yes, it is true. In the income and expenditure account, we record only revenue items. But in the receipts and payments account, we record revenue and capital items. So the given statement is true. Observe carefully. Fifth one, na? So it is true. Observe carefully. Next one. Since a company has existence independent of its members, it continues to be in existence despite the death, insolvency, or change of members. Yes, it is true. Because company has corporate legal entity now, separate from its members. So members' death, insolvency, it will not affect the company existence. So the given statement is true, student. So these are true or false statements. Next one. Here they have given one theory question. You can read simply money measurement concept and matching concept. You can go through it quickly. Next one, 1C. Here we have a question from valuation of inventory, the two inventory valuation technique. So LIFO weighted average. Here they have given weighted average method. Under weighted average method, what we do, whenever we issue inventory, we take issue price is equal to total cost divided by total units. Like this, we take issue price. Yes or no, students? Yes. Now look at first one. The following are the details of the spare parts of a chemical mill. Here, chronological order, try to observe. 1/1/2024, opening inventory nil. Next, purchases. 100 units, 300 per unit. You get 100 units purchase, 330,000. Balance is 100 units, 300 unit, 300 per unit, 30,000 rupees. Next one, 15/1/2024, issued for consumption 50 units. Out of 100, we issued 50. Here we take issue price directly 300 rupees because we don't have further issue price now. So 15/1 should balance. Is it clear, students? Next one. 1/2/2024 purchases 200 units, 400 per unit. So this is receipts now. 200 for 200 units to 400 price, total 80,000. So here be careful when you are writing balance amount. So earlier we have 50 units. Now we purchased 200, total 250 units. Earlier amount 15,000, now 80,000, total 95,000. Write down like this. Next, a minute. Look at 95,000 total divided by how many units? 250 units, 380 rupees price. This is weighted average price. This is weighted average price. Okay, next one. 15 to 2024. 15 to 2024 issued for consumption. Again 100 units. This time we take price 380 rupees per unit. Yes or no? Previous price. Observe 100 units, 380 rupees price, 38,000. Balance earlier 250, now 100 issued now 150. Amount there is no change. So 380 per unit, 50. Price per unit there is no change. Next one, 20th 2. Issued for consumption again 100 units. Here also we consider same price 380. Is it clear, students? So 100 units, so 380, 38,000. Balance units left 50. 380, 19,000. But at the time of writing balance, be careful. So finally, how much is our closing stock? 50 units of rupees 380 each, total 19,000 rupees. This is our closing stock. Clear, students? Next one. Come to second question. Second question is on rectification of errors. And when you are solving a problem from rectification of errors, be careful. Identify whether it is stage 2 or stage 3. Stage 1 is not stage 1, stage 2, stage 3. Stage 1 is nothing but what? Before preparation of trial balance. Yes or no? So here before preparation of trial balance, generally we don't use any suspense account. Stage 2 is nothing but what? After preparation of trial balance, but before preparation of financial statements. Stage 3 is nothing but what? After preparation of financial statements. Is it clear, students? Yes. Generally in the problems, the examination we get either stage 2 or stage 3. Identify that in the problem first. Look at before preparation of the trial balance, the following errors were found in the books of Saraswati and Sons before preparation of trial balance. Before preparation of trial balance. Give the necessary entries to correct them. So before preparation of trial balance means it is stage 1, student. Is stage 1. Observe carefully. Is it clear? So in stage 1, we don't use any suspense account. Do remember. So here, if it is one-sided error, then we simply rectify that account. If it is two-sided error, then we try to write the rectification entry. Here, students, so do remember, here we don't use any suspense account. Why? Why? Because it is stage 1 error, means before preparation of trial balance. Now look at one by one. Furniture purchased for office use amounting to 20,000 has been entered in the purchase day book. So by mistake we purchased furniture na, it is entered in the purchase day book. Earlier furniture account is not debited, now you debit furniture account, and purchase account is debited, now you credit. Entry furniture account debit to purchases account 20,000 rupees. So is it clear, students? Next one. An amount of 3,000 due from Satyam, which had been written off as bad debts in the previous year. Okay. Recovered in the current year and had been posted to the personal account of Satyam. What is the entry for bad debts recovered? Bank cash or bank account debit to bad debts recovered account. But here they recorded the entry cash or bank account debit to Satyam account. By mistake, Satyam account is credited na. Now you simply debit. So Satyam account debit to for the entry we record bad debts recovered account. Yes or no, students? Earlier bad debts recovered account is not credited na. Now we credit. Earlier Satyam account is credited. Now we debit. Is it clear? Next one. Minor repairs made to the building. Minor repairs made to the building. Which account we debit generally? Repairs to building account or repairs account simply. 18,500 were debited to building account. By mistake they debited to building account. Now debit repairs account, credit building account. So repairs account debit to building account. Next one. Fourth one. Goods purchased from Ram Singh amounting to 18,000 have remained unrecorded so far. It is complete omission. Na? So now we record the entry. What is the entry we record? Purchases account debit to Ram Singh account 18,000. Observe. Next one. College fees of proprietor's son. College fees of proprietor's son. Generally we debit a drawings account. 15,000 debited to audit fees account. Now what we do? Simply we debit drawings account and credit audit fees account. Look at, students. Is it clear? Next one. Receipt of 4,500 from Kanika credited to Anita account. Generally, what is the entry for this? Cash or bank account debit to Kanika account. So it should be credited. But by mistake credited to Anita account. Now how do we rectify this? Anita account debit to Kanika account. Anita account debit to Kanika account. How much? 4,500. Observe. Next one. Goods amounting to 8,900 had been returned by customer. What is the entry we record generally? Sales returns account debit to customer account and were taken into inventory, but no entry was made in the books. Now we record sales returns or returns inward account debit to customer or debtor account. Next one. 7,500 paid for wages. 7,500 paid for wages to workmen for making office furniture. Generally, what is the entry we record for this? Office furniture account debit to cash or bank. But what happened here? Had been charged to wages account. Now what we do? Debit office furniture account to wages account. Simple. Next one. Salary paid to clerk 18,000 has been debited to his personal account. Normally, what is the entry we record? Salary account debit to cash or bank account. But here by mistake debited to personal account of clerk. Now, what is the rectification? Salary account debit to clerk account credit. Is it clear, students? Next one. A purchase of goods from Raghav amounting to 20,000 has been wrongly entered through the sales book. Means, what is the earlier entry recorded? Raghav account debit. So, we recorded in the sales book means Raghav account debit to sales account. Actually, what is the correct entry? Purchase account debit to Raghav account. Now rectify this. Earlier purchase account is not debited, now debit. Sales account credited, now debit. Raghav account credit. Is it clear, students? Observe carefully. So Raghav account is credited with double amount. Don't forget to write this. This is rectification of error problem. Next one. Yes, Chand and Sons. This is depreciation problem, student. If you observe, in the depreciation, they have asked prepare machinery account, machinery disposal account, and provision for depreciation account. So be careful here. So when we are maintaining machinery disposal account, cost of asset we have to transfer to machinery account, and whatever the depreciation we maintained till now on the asset sold, that is also transferred to the machinery account, the disposal account. There we find out the profit or loss on sale of machinery. Is it clear, students? Yes. So now look at it. Yes, Chand and associates purchased a machine for 3 lakhs. On which date? 1/1/2021. So what is the entry we record? Machinery account debit to bank account. So post into machinery account debit to bank 3 lakhs. So whenever you are solving problems on depreciation, first identify year wise. So here the year is 2021, 2021, next 2022, 2023, like this. So they are following, you read the problem total, they are following calendar year. Yes or no, students? Yes. So during this particular year, which transactions happened, identify. Purchase of asset, sale of asset, or provided depreciation, or anything. So identify what transactions happened during 2021. Is it clear, students? Another machine costing 4,50,000 was purchased on 1/7/2022. 1/7/2022 means next year, na? So now for the year 2021, there are no transactions now except purchase of asset. So for purchase of asset, we recorded the entry machinery account debit to bank. Now provide depreciation. For providing depreciation, normally what is the entry we record? Depreciation account debit to machinery account. But here they are maintaining provision for depreciation account. So what is the entry we record? Depreciation account debit to provision for depreciation account. So provision for depreciation account is credited. So by depreciation 45. So here when you are solving problems from depreciation, when given data contains more than one asset, it is better to maintain some working note like this. So carefully, working note like this. Here I have prepared, look at working note. Calculation of simple. First, we talk about machine 1. It is purchased on 1/1/2000. Here, what is the cost of asset? 3 lakhs. What is the method of depreciation they are providing? 15% on written down value. So WDV method. 3 lakhs into 15%. 3 lakhs into 15%, 45,000. Write down 45,000 here. So 2021 completed, balance. Balance the account. So here balance 3 lakhs. Here opening balance 3 lakhs. Now we are in which year? 2022. Try to observe what happened in the year 2022. Okay. The same time provision for depreciation also balance 45,000. The same 45,000 balance. So when you are writing years, na, be careful. When you are writing years, be careful. Next look at 2022. What happened? On 1/7/2022, we have purchased another machine. Entry bank account, sorry, machinery account debit to bank account. The account debit to bank account 4.5 lakh. In our working note, we add one more machine. This is purchased on 1/7/2000. What's the cost here? 4.5 lakh. Now check what happened during 2022 now. On 31/12/2023, they are giving next information on 2023. Now 2022, there are no more transactions. So calculate depreciation. This time we should calculate depreciation on two assets. Get first one. On this 2,55,000 to 15%, right away we get 38,250. On this 4,50,000 into percent into, this is purchased on which date? 1/7. So here we calculate depreciation. How much you get? So 4.5 lakh into 15%, you get 33,750. So what is the total depreciation for 2022? This is it clear, students? So write down the entry. What is the entry here? We record depreciation account debit to provision for depreciation account. So go to provision for depreciation account. By depreciation 72, 38,250, 150. If you want, you can write here. For this year, this account is balanced. So balance C by D, balance B by D. Machinery account also balanced. By balance C by D, balance. Now we are in 2023. Observe 2023. What happened? Next date they are giving 31/12/2023, means 2023 completely completed. Means we have to provide a depreciation on these two assets. First, calculate depreciation for 2023. This is the depreciation for 2020. Here, students. Now, what is the entry? Depreciation account debit to provision for depreciation account. Look at provision for depreciation account. 32,512 on the asset sold and 32,438 on the remaining asset. Is it clear, students? Now, on this date, what happened? We sold the asset. We sold the asset. Here, whenever you sold the asset, first transfer cost of asset to machinery disposal account. For that, what is the entry we record? Machinery disposal account debit to machinery account. So machinery account credit side by machinery disposal. Relax. Machinery disposal account debit side to machinery account. Second. Cost of asset transfer. Now transfer depreciation on the asset sold from provision for depreciation account to machinery disposal account. For that, what is the entry we record? Provision for depreciation account debit to machinery disposal account. So here calculate what is the total depreciation on the asset sold. Calculate what is the total depreciation on the asset sold. Observe 45,000 plus 38,250 plus 32,512. This is the total depreciation on the asset sold, that is transferred to machinery disposal account. Entry provision for depreciation account debit to machinery disposal account. Total depreciation is 1,15,000. Same is transferred to disposal account. Is it clear, students? Next look at the machine purchased on 1/1/2021 was sold for 1,50,000. Sold the machine for 1,50,000. Entry bank account debit to machinery disposal account. Posting by bank. Now calculate profit or loss on sale of asset. Here itself you can calculate. Okay. Now the book value of asset as on the date of sale is 1,84,238. Sale proceeds are 150. Loss 34,230. This loss we transfer to P&L account. So by profit and loss account. Is it clear? So with this machinery disposal account is completed. Now look at balance provision for depreciation account. Balance is 36,118. Now this balance of 36,118 consists of machinery to na. This consists of machinery to depreciation. Now balance machinery account also. Machinery, now this machinery account contains second machinery information. Machinery account contains second machinery information. Machinery account, disposal provision for depreciation account, and machinery disposal. Is it clear, students? Third question. 3A consists of dissolution of partnership. This dissolution of partnership. So carefully. In dissolution of partnership, we have two types of problems. One is normal dissolution. So preparation of realization account, partners capital accounts, and bank account. Another type of problem is piecemeal distribution. Another type of problem is piecemeal distribution. So identify whether it is normal dissolution problem or piecemeal distribution. Dear students, now look at P, Q, R, and S had been carrying on business in partnership, sharing profits and losses in the ratio of 4:3 to 1. They decided to dissolve the partnership on the basis of following balance sheet as on 30th April. Now, it is normal dissolution. Now, observe carefully. Okay. Now look at applying the principles laid down in Garner versus Murray. Prepare the realization account, partners capital account, and cash account. This type of problem na is, but when it comes to piecemeal distribution, you have to apply some little bit of common sense and little bit of but their drafting statement is very important. Now look at simple problem. So we have a process. First, they have asked to prepare realization account, draw realization account format. Next, partners capital accounts format and cash account format. After drawing formats, now look at what is the first step, student? Transfer assets to realization account. First step in dissolution, transfer assets to realization account. What is the entry for that? Realization account to debit to assets account. Transfer one by one asset. Land and building transferred. Furniture transfer. Stock transfer. Debtors transfer. Cash in hand. Open cash account and write down opening balance. To balance brought down. Capital overdrawn. Prepare partners capital accounts. These two partners capital accounts are showing debit balance now. To balance brought down. Observe. Yes, realization account debit and partners capital account debit balances. Or next one. Now come to liabilities side. Now come to liabilities side. Here capital accounts are showing P and Q credit balance now. So show credit balance 216 144 over. Next one, liabilities. Sundry creditor outside liability, mortgage loan outside liability, transfer to realization account. Entry. Sundry creditors account debit, mortgage loan account debit to realization account. So realization account credit side. Realization account credit side by sundry creditors mortgage. Next step. With this all balance sheet is completed. Next, realization were the assets were realized as under. So here check whether all assets are realized or not. Here we have four assets: land and building, furniture, stock, debtors. Check whether all assets are realized or not. If any particular asset information is not given, so what is your assumption whether it is realized or not? If it is tangible asset, assume it is realized at book value. If it is intangible asset, assume that intangible asset does not realize anything. Is it clear, students? This assumption. But here they are giving land and building, furniture, fixtures, stock, debtors. So all assets are realized. So calculate total amount of realization. 2 lakh 30 plus 42,000 plus 72,000 plus 65,000. Total 4 lakh 9,000 rupees realized. Entry for this: bank account debit to cash or bank account to debit to realization account. So go to cash account, write down to realization. All assets they have written. Go to realization account credit side. Realization credit side by cash. You can write total amount or you can write separate amount. Next one. Expenses of dissolution amounted to 7,800. What is the entry? Realization account debit to cash account. So realization account debit to cash 7,800. Immediately credit side realization. Next one. Further creditors of 18,000 had to be met. 18,000. This 18,000 rupees is nothing but unrecorded liability. Already we have to pay to the creditors 36,000. Now total amount payable to creditors 36,000 plus 18,000. And they are not giving any information about mortgage loan. So what is your assumption whether it is paid or not paid? So regarding any liability, if it is not given anything whether it is paid or not paid, we assume that this liability has been paid. Total 36 plus 18, 54,000 plus mortgage loan 1,10,000 paid. Entry. Realization account debit to cash or bank account. Go to realization account. Realization account debit to cash. Creditors important, to cash. Mortgage loan important. Now go to cash account credit side. Creditors mortgage. Next is R became insolvent and nothing was realized from his private estate. See here R became insolvent. In case of insolvency, here Garner versus Murray rule is applicable. So here you have to remember the provisions. What are the provisions? The loss due to insolvency of partner is capital loss. This is shared between partners, solvent partners in their capital ratio. And if any partner, just before dissolution, any partner capital account is showing debit balance, then we should not ask him to bear the loss of insolvent partner. Get here, R became insolvent. Now, yes, capital account is showing which balance? Debit balance. Now, we should not ask S to bear loss of R. And one more important point, in case of realization loss, suppose after all adjustments of realization, if we get realization loss, all solvent partners should bring the realization loss in cash to make their capitals good. Yes or no, students? These are the provisions of Garner versus Murray. Now, before solving fourth point, now first balance realization account. First balance realization account. Identify whether it is profit or loss. So here total is 6,55,300. There is a loss of 1,03,000. And this loss we distribute to all partners in 4:3:1 ratio. What is the entry for this? Realization account debit to, sorry, partners capital account debit to realization account. So realization account credit side, partners capital account debit side. Observe. Now all the solvent partners should bring this realization loss in cash. R became insolvent except or remaining people will bring this realization loss in cash. For that, what is the entry we record? Cash or bank account debit to partners capital account. Here partners capital account credit. So here some students they get confusion. This cash they bring because to follow Garner versus Murray rule. But in actual practice they will not bring, but only for on record we are showing it. Cash account debit. Is it clear, students? Next step. This realization account is closed. Now come to partners capital accounts. Who became insolvent? R. First balance R account. Balance R account. R account to debit side 21,000. Credit side nothing. So here total loss is how much? 21,000 is the capital loss. This is borne by solvent partners, their capital ratio. Here there are three partners P, Q, S. Already S account is showing debit balance. Now we should not ask to bear capital loss. Now who will bear P and Q? In which ratio? Capital ratio. Capital ratio. Here they are following fluctuating capitals. If it is fixed capital, whatever the capital accounts we have in the fixed capital accounts that we take. But it is if they are following fluctuating capital. Na? In case of fluctuating capital, we have to make some adjustments for all after doing all adjustments, whatever the capital accounts they are showing, that balance we take. But before distribution of realization profit or loss, all adjustments we do except realization profit or loss adjustment. Here there are no adjustments like interest on capital, interest on drawings, and general reserve distribution or workman compensation fund distribution. All these things. Next, observe. Now this loss they will bear in 216 is to 144. 216 is to 144. Then how much you get? The amounts. Observe carefully. 21,000 into 260 by 36. Oh, okay. 21,016. 2160 into how much? 12,636 and 842. What is the entry for this? P capital account debit, Q capital account debit to R capital. This entry we post. With this, R capital account is completed. Now next, balance all partners capital accounts. P capital account, Q capital account, S capital account. Here if you observe S capital is showing debit balance of 16,030 rupees. 16,030, credit 10,030. So he should bring 6,000. Entry. Cash or bank account debit to S capital posting. Now P capital and Q capital showing credit balances. These two balances must be equal to cash account balance. That means your problem is correct. Finally, the balances of capital accounts must be equal to balance of cash account. Then your problem correct. Here correct. This is our dissolution. If you get this type of problem now, then it becomes easy. Yes or no, students? But mainly focus on dissolution of partnership. The two these aspects: realization account, partners capital accounts, cash account. At the same time, focus on bill distribution also. Is it clear, students? That's it. Next one. Yeah. Mr. Dilip furnishes the following trial balance and some other information. It is final accounts problem now. Observe. Capital, balance sheet, liabilities side, purchases, trading account debit, sales, trading account credit, opening inventory, trading account debit, freight inward, trading account debit, salaries, P&L account debit, administration expenses, P&L account debit. Next, furniture, balance sheet asset, trade receivable, trade payable, balance sheet asset, balance sheet liabilities. Returns. So debit returns means sales returns. Deduct from sales returns 36,000. Purchase returns. Returns credit with purchase returns. Deduct from purchases. Discount allowed debit 57. P&L account debit. Discount received credit. P&L account credit. Bad debts. Check whether any provision for doubtful debts maintaining or not maintaining. If any provision for doubtful debts are maintaining, then simply transfer these bad debts to provision account. Otherwise, transfer to P&L account. Yeah, that's it. That means we are not maintaining any provision account. So simply transfer these bad debts to P&L account. Next, investments in government securities. Balance sheet asset, cash in hand, cash at bank. Balance sheet asset. In this problem, the important adjustments are GST adjustment, students. GST adjustment. Mainly focus on GST adjustment. Here we have input GST at the same time output GST. So set of provisions you should understand. Look at additional information they have given. Closing stock, trading account credit, balance sheet asset, furniture is depreciated, P&L account debit, balance sheet deduct depreciation, prepare a trading account, profit and loss account and balance sheet. This is another simple problem, students, but important is adjustment of GST. First look at CGST. After that, SGST. After that, IGST. So whatever the input GST we have, that is set off against output GST. Suppose if you have CGST input, first set off against CGST output. Then whatever the balance left, set off against IGST. Next, we have input SGST. Input SGST. That is set off against output SGST. Still you have some balance that can be adjusted against IGST. Next, IGST balance is there. First, set off against output IGST. Remaining can be adjusted against CGST. Yes or no, students? These are GST provisions. Observe. In this problem, GST provisions alone important. Remaining everything you can solve. So directly I am going to set off provision. Observe. Here, look at. First, this is tax payable output. How we are adjusting. Input, how much we have? 30,000 CGST, 30,000 IGST. First, this 30,000 is adjusted against CGST. Still, how much balance you have? 6,000 rupees balance you have. That is adjusted against IGST. Next, SGST output balance, how much you have? 30,000. That is first adjusted against SGST. Still, how much balance you have? 6,000. That is adjusted against SGST. So finally, this 24,000 gone. Next, out of 18,000, we have adjusted 12,000. Na? Remaining 6,000 rupees shown on the liability side of balance sheet. Here, what is our assumption? Output IGST is still payable. If you assume that output IGST is paid, then there is no liability of 6,000 rupees output IGST. At the same time, bank balance will reduce by 6,000 rupees. Bank balance will reduce by 6,000 rupees. Then what is your bank balance? 5,61,000 is your bank balance. Then when you assume that output IGST is, otherwise liability 6,000, cash balance no reduction. This is our problem, students. Next one, fourth problem. Fourth problem is given on 4A NPO problem, student. Observe. New state society showed the following position on 31st March 2023. Balance sheet. Here try to understand the dates. Mark the dates first. 31st March 2013. This is balance sheet, students. Next, the receipts and payments account for the year ended 31st March 2024. Balance sheet they are giving 31st March 2023, but whereas receipts and payments account they are giving 31st March 2024. Means this balance sheet is opening balance sheet and this is during the year receipts and payments account. Is it clear? Next one. Now look at what they are asking finally. You are required to prepare income and expenditure account for the year ended 31st March 2024 after making the following adjustment. See, here only the requirement is income and expenditure account. First, draw the format. Books of so and so club, books of new state society, income and expenditure account for the year ended 31st March 2024. Is it clear, students? Yes. Now, here only the requirement is only income and expenditure account. What is the nature of income and expenditure account? Tell me. Income and expenditure account is prepared based on accrual concept. Based on accrual concept means all expenses we show in the income and expenditure account relating to current year only. What is our current year? 23-24. And expenses paid, payable. At the same time, incomes received, receivable. Any other expense or income we ignore from this income and expenditure account. Is it clear, students? Yes. Here first read one by one item in the balance sheet. Capital fund, expenses payable. So in the beginning of the year we have expenses now. These generally we pay during the year. So look at, to remember. Next, electrical fittings asset, furniture asset, books asset, investment asset, cash at bank, cash in hand asset. Now observe, they are also giving receipts and payments account. Whatever the balances we have at the beginning of the year in the bank and cash, they become opening balances now. Check whether they have opening balances or not. Yes, they have opening balances. Is it clear, students? Now observe one by one item. First observe payment side. First observe payment side, students. Look at payments side. Observe payments side. We can make two types of payments. One is revenue payments, revenue expenses. Other one is capital payments or capital expenses. All revenue expenses are taken to income and expenditure account directly. Yes or no, students? All capital expenditures are shown the balance sheet. Is it clear? Now look at electric charges. So income and expenditure account debit side. income and expenditure account debit side. If there is no adjustment now, show this amount directly. Directly. Next one, postage and telegram. Look at the adjustments. Adjustment is for what? Membership subscription, outstanding rent, outstanding salaries, books depreciation. Next, electrical fittings and furniture depreciation. 60% of the entrance fees is to be capitalized. Interest on securities is to be calculated 15% per annum, including purchases made on 1/10/2023. So almost except outstanding rent and salaries, only outstanding for expenses. Remaining all are relating to income and depreciation. Okay, fine. Now look at. So that for postage and stationery, there is no adjustment. So show it directly. Next one. Telephone charges, no adjustment, show it directly. Next one. Books purchased, this is asset, paid. Outstanding expenses paid, 14,000. Observe any adjustment for outstanding expenses? Yeah. See, these 14,000 rupees, if you observe, previous year closing balance now, outstanding amount payable. So previous year expense we have paid in the current year, 14,000 match. So this we will not show in the income and expenditure account. Don't show it by mistake. Why? Because these are the expenses outstanding in the previous year. So ignore this. 14,000 ignore. Next, rent. This is the total rent paid during the year, 1,76,000. For this we have some adjustment. Outstanding rent still 8,000 rupees. So 176, right? 176 plus 8, total 184. 6,000, 8,000 rupees outstanding. Now this we show on the liability side of balance sheet. Here you need not to prepare any balance sheet. Next one. This is very, very logical, students. Next, investment in securities. This is added to the investments already have. Next, salaries. This is nothing but salaries paid, 1,32,000. Still outstanding how much? 6,000. Total salaries 1,38,000. Do remember. So 1,32 plus 6, 1,38. 6,000 rupees shown on the liability side of balance sheet. Next one. Balance. These are the closing balances of bank and cash shown on the asset side of balance sheet. Clear? So with this, all liability side completed. Okay, except two things we need to understand. One, mark investment in securities, at the same time books purchase. These two information important at the time of calculation of depreciation. Is it clear, students? Okay. Now, by the way, calculate depreciation also over. So electrical fittings on books how much? 10% per annum. Okay, additions how much? 1/4/2023. So look at the depreciation calculation. Books total 9,20,000 books. Opening balance, books opening balance 8 lakhs. During the year purchased 1,20,000, total 9,20,000. On 9,20,000, 10% 92,000. Next one, investments purchased now. Okay. Next, electrical fittings and furniture. Okay, now look at electrical fittings 30,000, furniture 10,000. Total depreciation write down in the income and expenditure account debit side. Next one. Now, opening investments how much? 3 lakhs. During their purchased how much? 80,000. So on 3 lakhs, we get interest. We get interest. Here, what is the interest rate given? 15%. On 3 lakhs, we get 15% interest for full year. On 80,000, we get interest for, these are purchased on 1/10/2023. Na? So for how many months we get? 6 months. So look at interest calculation. 15% on 3 lakhs, 45,000, 15% on 80,000 for 6 months. So 6,000. Observe. 80,000 into 15% into 12. So 6,000 rupees. Is it clear, students? So if you want, you can write it here. 80,000 to 15% into 6 for your understanding. The total interest receivable 51,000. But observe in the problem how much interest received. Interest received on securities 16,000. So still receivable 35,000. So in the income and expenditure account credit side, total we show 51,000 as interest. 51,000 as interest. Observe. Here students, over. Next one, look at receipts. Entrance fee 60,000. They said 60% of the entrance fee is capitalized. Means 40% of the entrance fees is shown as revenue income. Observe entrance fees. 40%. 24,000. Next. Membership subscription 4 lakh. Observe previous year balance sheet. Is there any outstanding subscription in the previous year? No. That means we received subscriptions in the current year 4 lakhs. And they said membership subscription included 20,000 received in advance. So out of 4 lakhs, deduct 20,000 the balance sheet in the income and expenditure account. 4 lakhs minus 20,000, 3 lakh 80. 20,000 again we show on the liability side of balance sheet as advance. Next one. Sale proceeds of old paper credit 3,000. Next one. Hire of lecture hall credit over. All incomes are taken to one expenditure. That's it. Simple problem. Okay. Next. Yeah. This problem is on death of a partner, students. Death of a partner. Observe carefully. So at the time of death of a partner, what is the care you have to take regarding joint life policy? At the same time, share of profit calculation. Regarding joint life policy and share of profit till the date of death. This much of care you have to take. The following is the balance sheet of Messrs. Krishna Brothers as at 31st March 2024. They share profit and losses equally. What is the profit sharing ratio? Equally. Observe Amit, Lalit, Sumit, three partners. General reserve. So what we do here? So we open partners capital accounts. Here what is the requirement? Journal entry for goodwill adjustment. Okay, fine. Revaluation account, capital accounts of partners and balance sheet after death of Sumit. So first open, record, draw journal format for goodwill entry and prepare revaluation account and capital accounts and balance sheet. So once you are ready with the formats, then we start our problem. Is it clear, students? Yes. Now look at. First we have capital accounts now. So show it them in the partners capital accounts. Trade balance 24,600, 24,600, 27. Next one. General reserve. Whether they specify or not, distribute this to the partners. 3,000, 9,000. Entry. General reserve account debit to partners capital account. 9,000 equal 3,000, 3,000, 3,000. General reserve. Next one. Trade payables. If there is no change in the trade payables, take this trade payables as it is to the balance sheet liabilities side. Trade payables. Is it clear, students? Next one. So with this liability side is completed. Now come to asset side. Machinery, furniture, fixtures, cash, inventories. Open cash account. Open cash account, or if there is no payment to the deceased partner, you need not to open any cash account. Now, machinery, go to the balance sheet, write down same things, machinery, furniture, fixtures, inventories. Look at machinery, furniture, fixtures, inventories. Write down as it is. Take the existing balances 30,000, 15,800, 12,600, 5,700. These are the existing balances. Now we see the adjustment. If any particular asset is increased, then we add. If any particular asset is reduced, then we deduct it. And the remaining amount we show in the balance sheet. And whether it is increased or decreased, that we show in the revaluation account. Logic. Now look at. Assets are to be revalued. Machinery 35,100 means 5,100 increase. So total 5,100. Go to revaluation account credit side, write down 5,100. Next, furniture 13,800. Earlier 12,000, sorry, 16,800, but now it is reduced to 13,800. So in the revaluation account, how much decrease? 3,000. Balance sheet, new value 13,800. Next one, fixers 12,600, but here Regarding fixers, there is no adjustment, so write down as it is fixers 12,600. Next one, inventories. Inventories earlier 5,700, new value is 4,500, means decrease. So 4,500 balance sheet decrease na. How much decrease? 1,200 revaluation account. With these all assets revalued, all liabilities reassessed. Now observe carefully. Over. A adjustment completed. So once revaluation of assets is completed, then you can simply calculate directly profit or loss. So calculate here profit or loss. Here it is a profit of 900 rupees. This profit distribute to partners. Entry. Revaluation account debit to partners capital account. Partners capital account credit side 300 300. Understood, students? With this revaluation account is completed. Now look at one by one adjustment, important adjustment. Here you have trade receivables. Regarding trade receivables, there is no adjustment. Now write down as it is. Write down as it is. Clear? Next. Now important adjustment. Goodwill was valued at 18,000 and was to be credited with his share without using a goodwill account. Anyway, in case of admission, retirement or death, we don't use any goodwill account. Instead of that, we adjust this adjustment through partners capital accounts. Yes or no? So what is the goodwill? Total goodwill is 18,000. What is the share of goodwill of deceased partner? Who died? Sumit. Equally na. So out of 18,000, Sumit will get 1 by 3. That means 6,000 rupees. 6,000 rupees. This is borne by, or this is compensated by remaining two partners, Amit and Lalit, in their gaining ratio. So to calculate gaining ratio, what is the formula? New ratio minus old ratio. Here what is the new ratio? Equally. So automatically the gaining ratio is also equal. So that Amit and Lalit will bear this 6,000, 3,000 and 3,000 entry. Amit capital account debit, Lalit capital account debit to Sumit capital account. Observe. Amit and Lalit capital account debit to Sumit capital account 3,000 3,000. Now by Amit and Lalit capital account 3,300 3,000. Goodwill adjusted. Next one. 6,000 is to be paid to the executors of the dead partner on 5th April. Okay. After death of Sumit, Amit. Okay, simple. Here you need not to do any share of profit adjustment because there is no instruction. Simple. We are safe side. Next, now who died? Sumit. Balance the Sumit account quickly. 36,300. What is the balance here? 36,300. Debit said nothing. So they said immediately pay 6,000 rupees to Sumit. Immediately pay 6,000 rupees to Sumit, and remaining amount they said transfer to the executors of deceased partner loan. Okay, look at 1,000 rupees we are paying and we are transferring the remaining balance to executor. Okay, fine. Now look at. After that, balance Amit capital and Lalit capital. Here we have capitals 24,900, 24,900. Show them in the balance sheet liability side. Don't forget to show executors account in the balance sheet. Okay. Lalit capital, Amit capital at the same time with executors account. That's it, student. This is very simple problem, student. This is goodwill adjustment. Very simple problem. You get this type of problem in the exam now, you can score full marks. You can score full marks, students. Full marks. They have given here for 12 marks, for easily 12 out of 12. And what about goodwill adjustment entry? Already we have recorded now. Amit capital account debit, Lalit capital account debit to Sumit capital account. This is a goodwill adjustment entry. Next problem. Yeah, 4A. This is bills of exchange, students. Bills of exchange. Okay. Ali draws a bill for 45,000 on Akbar on 15th April 2024 for 3 months. For 3 months. Which is returned by Akbar to Ali after accepting the same. Fine. Ali gets it discounted with the bank for 44,100 on 18th April and remits 1/3 amount to Akbar. It is nothing but accommodation bill. Yes. In case of accommodation bill, what happens? Generally, we draw two bills. Generally, first bill is drawn, amount is shared. To honor that bill, we draw another bill. Automatically, the first person who has drawn the bill, he become insolvent. Happen na normally. This is a requirement first. Pass necessary journal entries for the above transactions in the books of Ali. Pass necessary journal entries for the above transactions in the books of Ali. Only Ali books. Okay. For the first transaction, for the first line, what is the entry? Bills receivable account debit to Akbar account. Bills receivable account debit to Akbar account 45,000. Now this bill is discounted. Entry. Bank account debit, discount account debit to bills receivable account. So here they have given the amount, you need not to calculate any discount. Sometimes you should calculate the discount. So 44,100, discount is 900. Clear? Now out of that, how much amount is sent to Akbar? One third. So amount sent one third, at the same time discount also he has to bear one third. Entry. Akbar account debit 45,000 into one third, 15,000. Discount 900 into one third, 300. Remaining amount cash paid. Now look at next. On the due date, Ali fails to remit the amount. How much amount Ali has to remit? 20,000. Oh, sorry, 30,000 rupees. Ali has to remit 30,000, and Akbar will add more 15,000 rupees. They have to honor the first bill. Here they failed to honor the first bill. That's why what Ali is doing, Akbar, but he accepts bill for 52,500. Now this time Akbar is drawing a bill on Ali. So we accepted a bill na entry. Akbar account debit to bills payable account 52,500. Clear? Next one. Now what Akbar will do? Akbar will discount the bill to the bank. After discounting the bill, Akbar will honor the first bill. You need not to write any entries in the books of Ali. But here, what is happening for 3 months, which Akbar discounts for 51,300 and remits 8,745 to Ali. So here we are receiving 8,475. Case of accommodation bill now. Biggest problem for the student is calculation of discount for the second bill. Calculation of the discount should be owned by Ali for the second bill. That's the problem. Simple. Here, like this, you people try to draw a flow chart. What is the bill amount? 52,500. Divide this into two parts. Cash received. Cash received how much? Just a minute. 51,300. 1,300. Automatically discount how much? 1,200. Now this discount is borne by Ali and Akbar. How they will bear this discount, how they will share this discount means how this amount is utilized by them. How this amount is utilized by them. So out of 51,300, how much amount utilized by Ali and how much amount utilized by Akbar? Calculate. Here look at Ali. So out of the first bill, Ali has to bring 20,000 rupees. Ali has to send 20,000 but did not send. Okay, that's why out of the second bill, first he utilizes 20,000 because out of the second bill, out of the proceeds of second bill, he honored the first bill. Next one, how much amount remitted? 8,475. So plus 8,475. First bill amount to 20. Now out of the second bill proceeds, we are sending 8,475. Means he utilizes 28,475 rupees. So for 51,300, what is the discount? 1,200. For 28,475, what is the discount? Proportionate. Calculate. 28,475 into 1,200 divided by 51,000. We get 660. So carefully. Sir, no, that's it. Just a minute. Okay. Here a small 30,000 na. So first bill 30,000 na. So 38,475 into 1,200 divided by 51,300. So 900 rupees. Here Ali should bear 900 rupees discount. So finally look at what is the entry: bank account debit, discount account debit, and Akbar account. That's it. After that, what happened? After that, what happened? We don't know whether the bill is honored or whether the bill is dishonored or whether Ali became insolvent. If he became insolvent, what is the amount paid? We don't know all these things. Just they have given till here so that we have written entries also. It's very, very simple problems. Is it clear? That's it. Next, look at 5B. Varun does not maintain proper books of accounts, means accounts from incomplete records. However, he maintains a record of his bank transactions and also is unable to give following information from which you are requested to prepare trading and profit and loss account. I tell you something. So recently, December 24, CMA inter exams completed. In that, Group 1 Financial Accounting Paper 6, they have given same problem in December 2024. It is lengthy. They have given more information, but here they have cut the information. If you want, you can check December 26 question. Yes, sir. December 24, paper 6 question paper financial accounting. Same question. There is no change in the amounts. Same amounts. Same. Here. Okay. Now look at. So, but here they are asking only trading account and profit and loss account. Okay. Fine. Trading account, profit and loss account, draw the format first. Trading account, profit and loss account, draw the format first. Okay, I have drawn trading and profit and loss account. First information, look at 1/1/2024 opening, 31/12/2024 closing. Stock 50 opening, closing 62,500. What we do? Simply we go to trading account, debit side. Opening stock 50,000, closing stock 62,500. One. Fixed assets. Opening 7,500, closing 9,000. No need to prepare any balance sheet, so that ignore this information at present. But it is better to prepare fixed assets account. Opening balance 7,500, closing balance 9,000. Dear students, next information. Details of his bank transactions were as follows. Sale of fixed assets 1750. We sold asset na, entry bank account debit to asset account 1750. So what is the cost of asset? 2,500. Means 2,500 worth of asset we sold for 1,750. Remaining 750 is loss. 750 loss. Transfer to P&L account debit. Simple. Transfer to P&L account debit. Next one. Expenses paid 49,250. Entry. Expenses account debit to bank. So expenses P&L account debit side 49,250. This is simple problem, student. Purchase of fixed asset 5,000. So credit side 5,000. Sorry, debit side 5,000. Is it clear? Now balance fixed assets account. Balance 7,500 plus 5,000. 12,500. 12,500 minus 1,750 minus 750 minus 9,000. Difference we have 1,000 rupees. What may be this 1,000 rupees? This may be depreciation on fixed assets. So depreciation on fixed asset is transferred to P&L account debit. Is it clear? Next one. That's it. No cash transactions took place during the year. There are no transactions. Goods are sold at a cost 25%. So cost plus 25%. So cost of goods sold is 2,60,000. So here you can calculate directly sales now. COGS 2,60,000. Add profit. How much? 25%. So 2,60,000 into 25%. 65,000. Then total sales 3,25,000. Is it clear? So how we utilize this information? Observe carefully. 3,25,000 trading account credit side. 3,25,000 trading account credit side. 65,000 rupees gross profit is there. That is trading account debit side. Now if you observe trading account, we have opening stock, sales, closing stock, gross profit. Now the missing figure is purchases. Now the missing figure is purchases. So the balancing figure is nothing but purchases. Clear? Now this gross profit is taken to the P&L account credit. Now balance here. The net profit is 14,000. To get fixed assets account. Is it clear, students? Very simple problem. Okay. Next one. 5C. Following is the extract of the balance sheet of Substance Limited as at 31st March 2024. Okay. Authorized capital 45,000, 12% preference shares. Okay. 4,50,000 equity shares of 10 each. Okay. This is authorized. Next. Issued and subscribed 36,000, 12% preference shares of 10 each fully paid. 4,05,000 equity shares of 10 each 8 rupees and partly paid, means partly paid. Reserves and surplus, we have general reserve, capital reserve, profit realized on sale of plant. Okay. Securities premium, profit and loss account. Fine. On 1st April 2024, the company has made final call at 2 each on 4,05,000 equity shares. First write down the entry for this. Entry. Equity share final call account debit 4,05,000 shares into 2 rupees to equity share capital account. Without second thought, first write down the entry for this. Equity share final call account debit to equity share capital account. Next one. The call money was received by 20th April. What is the entry for that? Bank account debit to equity share final call account. Over. Next one. Thereafter, the company decided to capitalize its reserves by way of bonus at the rate of 1 share for every 4 shares held. To issue bonus shares, first of all, check whether existing shares are fully paid up or not. Yes. And do remember, bonus is given only to equity shareholders, not to preference shareholders. First, here there are steps for bonus issue. First, bonus ratio. What is the bonus ratio? 1 share for every 4 shares held. 1 share for every 4 shares held. Second, calculate number of bonus shares to be issued. Number of bonus shares to be issued. Existing shares 4,05,000 into 1 by 4. Sorry, 1 by 4. How many shares? 4,05,000 into 1 by 4. 1,01,250 shares. Next, calculate amount of bonus share into 10 rupees each share. Na? So, total we need 10 lakh 12,500. This much of amount we need, student. Observe. This much of amount we need. Get the calculation. They did not give any calculation, but how many bonus shares we have to issue? Follow these steps. Simple. First, calculate bonus ratio. Second, calculate number of bonus shares to be issued. After that, multiply number of bonus shares issued with the face value. You get 10,12,500. This much of bonus shares we have to issue. For this, what are the sources here? We have sequence of sources. Now, first one CRR. Next one securities premium. Next one capital reserve if realized in cash. Next one general reserve. Next one profit and loss account balance. Here we don't have any CRR, but here we have securities premium 1,12,500. At the same time general reserve, sorry, capital reserve, and after that we use general reserve. If amount is not sufficient, we use profit and loss account. So the entry here, securities premium 112,500, capital reserve 1,80,000, general reserve 5,40,000. Still we need balance of 1,80,000 that we have taken from profit and loss to bonus to shareholders. Simple. Now issue bonus shares. Entry bonus to shareholders account debit to equity share capital account. Bonus to shareholders account debit to equity share capital account. The simple problem on bonus issue. Only bonus issue. There is no other right issue, redemption of preference shares, nothing. Company decided to use capital reserve for bonus issue as it has been realized in cash. Anyway, we use it. So necessary journal entries in the books of the company and prepare the extract of balance sheet as on 30th April 2024 after bonus issue. Already we have recorded entries. Now look at the balance sheet. Simple. Whatever the balance sheet they have given in the problem, you continue that balance sheet. Wherever the amounts and numbers changed, you also try to change. That's it. Look at authorized share capital 45,000. Earlier, whatever we have, the same. Earlier, what are the equity shares? Authorized equity shares 4 lakh 50. But now 4 lakh 5,000 plus 1 lakh 1,250. Total 5 lakh 1,250. Here we have to increase the authorized share capital. That is very important. So authorized share capital 5 lakh 6,250 over. Now issued. There is no change in the preference share capital. Yes. There is a change in the equity share capital. Earlier partly paid up. Now fully paid up plus bonus issue. Total 5 lakh 6,250 into 10 rupees. Now reserves. All reserves are closed because we have utilized securities premium, capital reserve, general reserve. These three accounts are closed. Next account P&L. P&L account, earlier how much balance we have? 9 lakhs. We have utilized 5 lakh 80,000. Na? Sorry, 1 lakh 80,000. Remaining 7 lakh 20,000. That's it. This is extract of balance sheet. Dear students, next one. Now sixth problem, 6A and 6B. Observe. X Limited issued 2 lakh equity shares of 10 each at a premium of 10% payable 2 on application, 4 on allotment, including premium, 2 on first call, and balance on the final call. Issue of shares problem. Okay. All the shares were fully subscribed. In case of full subscription, there is no problem. Problem will be very smooth. Mr. P, who held, first of all, write down the entry for application money because it is fully subscribed. Entry bank account debit to equity share application account. 2 lakhs into 2, 4 lakhs. So, bank account debit to equity share application 4 lakhs. Immediately transfer application because it is fully subscription. Now, it is full subscription. So that transfer total money to capital. So, equity share application account debit to equity share capital account. Now, immediately call for allotment amount. Entry equity share allotment account debit to equity share capital account. How much? 2 lakh shares into 4 rupees, and this amount includes premium of rupees 10% means 1 rupee. What's the entry we record? Equity share allotment account debit 4 rupees to equity share capital 3 rupees to it is premium 1 rupee. Multiply with 2 lakhs. That's it. Now, if you receive the total amount of allotment, entry bank account debit to equity share allotment. If any amount is not received, then the amount not received is transferred to simply calls in arrears. Yes or no, students? Check whether allotment amount received or not received. Mr. P, who held 20,000 shares, paid full remaining amount on its final first call itself. This is calls in advance. The final call was made after 4 months from the first call. Here we have to pay interest on calls in advance. Okay. So on calls in advance, we pay interest at 12%. On calls in arrears, we charge interest at 10%. Don't forget. Fully paid, except a shareholder having 2,000 shares and one another shareholder having 1,000 shares. This is calls in arrears. They paid their due amount after 3 months. So we should charge interest on calls in arrears, students. Don't forget. And 4 months respectively, along with interest on calls in arrears. Company also paid interest on calls in advance. Here they did not mention calls interest on calls in arrears, rate of interest on calls in arrears. At the same time, rate of interest on calls in advance. So here you have to take them from Companies Act provisions. To Mr. P. The company maintains calls in arrears and calls in advance account. Means whenever we receive advance amount, that is transferred to calls in advance account. Whenever amount is not received from shareholders, that amount we transfer to calls in arrears account. Give journal entries to record these transactions. Show workings of interest calculation. Very simple problem, students. Why it is simple? There is no for feature. There is no for feature. Why? Because all amounts are received. Na? When there is no for feature, there is no concept of reissue or no. Get one by one entry. So that means allotment amount total received, bank account debit to equity share allotment account. Now final call. Entry equity share final call account debit to equity share capital account. 2 lakh shares into, sorry, first call 2 lakh shares into, what is the amount due on first call? 2 rupees. Final call 2 rupees. Yes or no? Total 11 na? 10 plus 1 11 rupee. How we are receiving this 11 rupee? 2 application, 4 allotment, 2 first call. Means 8. So 3 final call. Final call amount 3. Right. So 2 lakhs into 2 rupees, 4 lakhs. At the time of first call, we received amount on 20,000 shares in advance. So that amount we transfer to calls in advance. So 20,000 shares into final call amount 3 rupees. So 60,000 rupees we transfer to calls in advance. This is important in this problem. Remaining our 4 lakhs anyway we received. Now, entry for final call due. Equity share final call account debit to equity share capital. 2 lakh shares into 3 rupees, 6 lakhs. Out of 6 lakhs, we already received 60,000. Now we should receive 5,40,000 rupees. Check whether you received this 5,40,000 rupees or not. They said, what they said, on 2,000 shares amount not received, on 1,000 shares also amount not received. That means on 3,000 shares amount not received. 3,000 shares into 3 rupees, 9,000 rupees. That means we have not received 9,000 rupees. This 9,000 rupees we transfer to calls in arrears. So 5,31,000 rupees we receive cash. Now, earlier whatever the advance amount we have, that advance amount we adjust against final call. Finally, what is the entry? Bank account debit 531, calls in advance 60, calls in arrears 9,000 to equity share capital. Equity share final call. That's it. Now they said we received this arrears amount with interest. With interest. Here calculation of interest is very important. First, calculate interest on advance amount. Advance amount. Calculate interest on advance amount. Okay, everybody? Yes. So, final call which was made after 4 months from the first call. But we received amount 4 months before now. So, total 60,000 into 4 by 12 into 12 by 100. Entry for interest. This interest is expense for us because we are paying na debit. So interest on calls in advance account debit to shareholders account. Rate 12%. So if you want, you can write 60,000 into 12 by 100 into 4 by 12. You get 2,400. Pay this interest. Interest on, sorry, shareholders account debit to bank 1,400. Next one, charge interest on arrears. That means calls in arrears. Observe, one person he paid amount when 4 months from the first call. They paid their due amount 3 months and 4 months respectively. So on 2,000 shares we received amount after 3 months. On 1,000 shares we received amount after 4 months. So calculate separately. First one, shareholder account debit. Sorry, shareholder account debit to interest on calls in arrears. Interest on calls in arrears is income for us, credit. You can write down calculation. 2,000 shares into 3 rupees per share means total 6,000 into 10% to 3 by 12. How much? 150. Calculate 1,000 into 10% into 3 by 12. 150 rupees. Now we receive 6,000 rupees arrears plus interest 6,150. So bank account debit, calls in arrears, shareholders. Next 1,000 shares. On 1,000 shares we have to treat separately. So on 1,000 shares, what is the rate of interest? 10% only. So 1,000 shares, 1,000 shares, 3 rupees, 3,000 into 6, 4 by 12 because we received after 4 months to 10%. How much? 100. Calculate 3,000 into 10% into 4 by 12. So 100 rupees. Now we receive 3,000 rupees along with interest 3,100. So bank account debit 3,100 to calls in arrears to shareholder. Is it clear, students? So this is simple problem, but number of entries are more. The whole focus is on interest calculation. Interest on calls in advance, interest on calls in arrears. This is problem number A. Now look at 6b. 6b, they are giving option. They are giving one problem. At the same time, they are asking to write one question. It is your choice. Explain in brief objective and advantages of setting accounting standards. Or else they are asking prepare a bank reconciliation statement. So most of the students, they choose bank reconciliation statement. Observe, bank balance as per passbook. Favorable balance. So put the heading bank reconciliation statement on 31st March 2024. Start with passbook balance. Balance as per passbook. Bracket lo credit side. In the bracket, credit 75 lakhs. So this is our problem format. Look at, that's it. Now look at one by one item, whether it is added to passbook balance to get cash book balance. Okay, look at bills discounted, dishonored, not recorded in the cash book. So passbook balance increases now. Sorry, passbook balance decreases, cash book balance increases. So that this is added. Next, look at 37 lakh 50,000. Next one, check received entered twice in the cash book. We received check that is entered into the cash book twice. Means cash book balance increases, whereas passbook decrease. So increase one time. Bank charges entered twice in the cash book. This is cash book error na. What we do? Simply, bank charges entered twice means bank balance decreases. Because our target is what? Cash book. Insurance premium paid directly by bank under standing instruction. Automatically our bank balance decreases. It is not recorded in the cash book na. So cash book balance in. Simple, students. Next one. Checks issued but not presented to bank for payment. We have issued checks. As per our cash book, balance decreases, whereas they are not presented into bank. Passbook balance increase, but we need which balance? Minus. Checks received but not sent to bank. We received checks but not sent to bank. Means in our cash book, balance increases, whereas passbook balance decreases. Checks deposited in bank but no entry passed in the cash book. We deposited checks into bank, so bank balance increases, but for this there is no entry in the cash book. Cash book balance decreases. Next, credit side of bank column. Bank column means cash book. Cast short. Credit side of the bank column cast short means payments are showing less. When payments are showing less, automatically cash book balance increases. So cash book balance increases. Now to this 75 lakhs, you just assign these symbols. Okay. So 75,000, 3750. Next 75,000. Next 4 lakh 50,000. Next 84 lakhs. Next 1000. That's it. How much? 1 crore 26 lakh 90,000. Total 2 crore 1 lakh 9. Next, deduct 15,000, 3750, 750. How much? 7515. So finally, favorable balance as per cash book. That's it, friends. So this is our MTP. This is our MTP for January 2025. MTP January 2025. Is it clear, students? So we meet again in the next MTP. We have already got series 2, MTP series 2 also. So I will try to upload soon. Is it clear, students? Yes. Don't forget to subscribe this channel, and if you like this video, try to share to your friends also. For more updates, click on bell icon. That's it, students. We meet again in the next video. Till then, bye bye everyone. Hello students, how are you all? I hope you are doing well. In this video, we are going to discuss CA Foundation Accounting January 2025 RTP. First of all, let us try to understand what is the purpose of the RTP. So, if you observe, the RTP contains one question from almost each chapter. One question from each chapter. You can able to solve this question, that means you have prepared well, or reasonably your preparation is good to solve the questions. Yes or no, students? After RTP, next level you can test your knowledge by solving MTP, mock test paper. After that you can go to exams. Yes or no, students? Yes. Now, without wasting much time, we try to solve this RTP questions, students. Now observe the first question, true or false statements. First question, true or false statements. As you know very well, we get 6 true or false statements in the final exams. 6 into 2 marks, 12 marks. That is the importance we have for true or false statements. Now, first one, state with reasons whether the following statements are true or false. Okay, first one. The debit notes issued or used to prepare sales returns book. See, generally whenever a customer returns goods, customer will send debit note. After receipt of goods and a debit note, the buyer, that means the supplier will send credit note to the customer. Both notes will contain same information. Now, for a supplier or creditor, sales returns, he maintains sales returns book by using credit note. By using credit note, debit note is used by the customer, credit note is used by the supplier. So if you think your supplier, we use credit note to record or to prepare the sales returns book. Yes or no, students? Look at the first one. The answer is false. Debit note issued or used to prepare purchase returns book. Yes or no, students? Next one. Second one. Sale of office furniture. Normally, what is the entry we record for sale of office furniture? Cash or bank account or debtor account debit to furniture account. Yes or no? Should be credited to profit and loss account. No. Generally, profit or loss on sale of furniture is transferred to the profit and loss account. But here they said sale of office furniture is credited to the profit and loss account. No, sale of office furniture is credited to the furniture account. Yes or no, students? Yes. Get second one, false. Next one. Outstanding salaries for the previous year. Outstanding salaries for the previous year shall be shown as liability in the current year balance sheet. Actually, outstanding salary liability is shown on the liability side of the previous year balance sheet. That becomes opening balance for the current year. That means that is shown opening balance sheet for the current year. But current year balance sheet we didn't show this because it is previous year item. Yes, almost last year whatever outstandings we have, we may pay all these outstandings in the current year. That's why again this is not shown in the current year balance sheet. So the given statement is false. It shall be disclosed as a current liability in the opening balance sheet, not closing balance sheet. Next one, fourth one. When closing inventory is overstated. Normally, when the closing inventory is overstated, automatically our gross profit gets increases. Yes or no, students? Net income also increases. Net income for the accounting period will be understated. So the given statement is false. If closing inventory is overstated, automatically gross profit overstated. At the same time, net profit also overstated. So the given statement is false. Observe carefully. Fourth one. Next one. The result and the position disclosed. Result means whether profit or loss. Position means financial position. Disclosed by final accounts are not exact. Yes, because we follow different concepts, conventions, principles while preparation of accounting standards, also while preparation of these financial statements. So entity to entity we follow different concepts. So the result and position disclosed by final accounts are not exact. True. Go and look at. True. They are prepared on the basis of assumptions, conventions, concepts, and personal judgments of the personal person who prepared them. That's why these are different. Next one. In case of a public holiday, Public holiday means this is the concept of bills of exchange. So, in case of a public holiday, the due date of the bill, normally the due date of the bill falls preceding the public holiday. Preceding the public holiday. In case of emergency holiday, then the bill falls on succeeding holiday. So, the due date of the bill falls on the next working day. No, it is false, na? False. In case of a public holiday, the due date of the bill falls on the preceding working day. Next one. Goodwill is intangible asset. Yes. Therefore, it cannot be valued. No. Even though goodwill is intangible asset, it can be valued. So, the given statement is false. Seventh one. Yes or no, students? Next one. Where a non-profit organization is a separate trading entity. Separate trading entity. Normally, what we do, we prepare a separate trading account, and the profit or loss on trading activity is transferred to the income and expenditure account. This will happen normally. The profit or loss from the trading account shall be transferred to the income and expenditure account at the time of consolidation. Yes, it is true. Look at next one. The firm will receive surrender value. The firm will receive surrender value of the joint life policy on the death of the partner. Normally, on the death of the partner, the firm will receive full value of the policy. When the policy is surrendered at the time of retirement of a partner, then the firm will receive surrender value. So, the given statement is false. Yes or no, students? Next one. 10th one. Company X Limited is incurring huge losses. Okay. The board of directors are of the opinion that in case of losses, there is no need to pay interest on debentures holder interest to debenture holders. This is false. Even irrespective of the profit levels of the company, company has to pay interest to the debenture holders, and it is charged against profit. Yes or no? So the given statement is false. Observe carefully. Next one. Next, theoretical framework. They have given two questions. You people try to read these two questions. Now we jump into the problems. First problem is journal entries. The first problem is on the concept of journal entries. Look at carefully. Pass a journal entry in each of the following cases. So pass journal entry in each of the following cases. Fine. Look at first one. A running business was purchased by Mohan with following assets and liabilities. Whenever we purchase a running business, then how the entry is recorded? All assets are debit and all liabilities are credit. Difference is nothing but capital. That is credited now. Look at cash asset debit, cash account debit, land asset debit, furniture debit, stock debit, creditor liability credit, bank overdraft liability credit. So what is the entry we can write? Cash account debit 20,000, land account debit 40,000, furniture account debit 10,000, stock account debit 20,000, creditor liability credit 10,000, bank overdraft liability credit 20,000. And the difference is nothing but capital. So look at the entry here. Here to save our time, I am showing the answer directly, students. Okay, look at cash account debit, land account debit, furniture, stock, creditor, bank overdraft. Difference is nothing but 60,000. That 60,000 is treated as capital. Is it clear, students? Next one. Sold goods to Gagandeep for 1 lakh. Normally, what is the entry we record? Gagandeep account debit to sales 1 lakh at a trade discount of 20%. Now, how the entry will become? Same. Gagandeep account debit to sales. Trade discount is deducted 1 lakh minus 20%. 80,000 is our sale value. And charged IGST 12%. So, apart from 80,000 rupees sale value, we are also charging 12% IGST. That means how the entry becomes. Now look at 80,000 plus 12%. First 1 lakh is the sale value. 1 lakh is the sale value minus 20%. We get 80,000. Plus we are charging 12% GST. 12% on 80,000 nothing but 9,600. So total amount we collect from Gagandeep 89,600. Out of that, whatever the IGST we are collecting, that is payable to the government. So it becomes liability. Now, how the entry will become. Gagandeep account debit, total amount receivable from Gagandeep 89,600. 2. Sales. What is the sale value? 80,000 only. 2. Output IGST 12%, 9,600. The entry we record. You get? Yes. Gagandeep account debit 89,600. 2 sales 80,000. 2 output GST. That means IGST or GST account 12%, 9,600. Is it clear, students? Next one. Goods distributed by way of free samples 10,000. What is the entry we record? Advertisement account debit or free samples account debit to purchases account 10,000. Yes or no? Is the entry look at? That's it. Next one. Goods of list price 40,000 returned by Gagandeep. Goods of list price 40,000 returned by Gagandeep. Normally, what is the entry for this? These are sales returns. So we record the entry sales returns account debit to Gagandeep account 40,000. Actually, list price 40,000 minus 20%. Earlier, how much trade discount we have given? 20%. So 40,000 minus 20%, 8,000 rupees. So we record the entry for 32,000. Okay, sales returns account debit to Gagandeep account 32,000. But if you observe, earlier we have charged GST from him. Now this 32,000 rupees is returns, sales returns. So it is not our sales. Now we reverse, we reverse the output GST account. We reverse the output GST account because on sales you have to pay GST to the government. Now it is not sales now, so you need not to pay any GST to the government. That's why GST account is reversed. So look at how we record the entry. Sales returns account debit 32,000, output GST. So 30 IGST 32,000. Here also write down output IGST. 32,000 into earlier we charged 12%. Earlier we charged 12%, 3,840 rupees. Yes or no, students? Yes. To Gagandeep account, total 35,000. Now look at next. Kuldeep became an insolvent and could pay only 50 paise in a rupee. Amount due from him 6,000. Total amount receivable 6,000. Out of that only we are receiving 50 paisa. So 3,000 rupees we receive. Cash or bank account debit 3,000 rupees. Remaining amount bad debt becomes because he became insolvent. So bad debts account debit 3,000 to Kuldeep account 6,000. So that is the entry we record. Look at cash account debit, bad debts account debit to Kuldeep account 6,000. Is it clear, students? Yes. So this is the concept of journal entries. Now look at next concept, capital or revenue expenditure. Compulsorily you get at least one true or false statement on this concept, capital or revenue expenditure, or sometimes you get 4 marks theory question from this chapter, capital or revenue expenditure, maybe. Okay, now look at first one. Classify the following expenditures as capital or revenue expenditure or receipt. So here expenditure two types, revenue, capital or revenue. Receipt also two types, capital or revenue. So how can we classify whether it is revenue expenditure or capital expenditure? Suppose out of the expenditure if you get benefit within 12 months or one accounting year, then that expenditure is treated as revenue expenditure. If out of the expenditure if you get benefit for more than 12 months or one accounting year, then that expenditure is categorized into capital expenditure, and the expired portion of the capital expenditure is transferred to the profit and loss account every year. And revenue receipt means, so if any receipt is received by the business frequently, normally sales or a discount or interest, this is treated as revenue receipt. And whatever the amount we receive normally, occasionally, not frequently, then that is treated as capital receipt. Normally, for example, sale of asset. Sale of asset. See, generally we don't sell any asset. Yes or no? So whenever you sell any asset due to any condition, then that amount is treated as capital receipt. Is it clear, students? In the previous example, previous true or false statements, if you can observe, sale of office furniture. Second one, look at sale of office furniture. Sale of office furniture. Yes, by selling office furniture, we received amount. So that amount is nothing but capital receipt. Is not revenue receipt. Is it clear, students? Next one. Now look at the first one. An extension of railway track in the factory area. Extension of railway track in the factory area. So we have incurred some expenditure on extension of railway track. So first of all, check whether because of this expense, will you get any future benefits or not? Yes. So we get a future benefits of extending the railway track, students. So that's why this expenditure is treated as capital expenditure. Observe carefully. Expenses incurred for extension of railway tracks in the factory area should be treated as capital expenditure because it yields benefit for more than one accounting period. Next one. Amount spent on painting the factory. See, because of this expenditure, we don't get any benefit. Long benefit we don't get. That's why we treat it as revenue expenditure. So students, so painting of the factory is treated as revenue. Next one. Payment of wages for building a new office. See, we are building or constructing new office extension and we paid wages for that. So these wages are treated as capital expenditure. So payment of wages for building is treated as capital expenditure. Next one. Premium received on issue of shares. We received premium on issue of shares. So securities premium, this amount we transfer to the securities premium account and this amount we will not receive frequently. So it is treated as capital receipt. It is treated as capital receipt. Look at students. Payment received on issue of shares is an example of capital receipt. Next one. Rings and pistons of an engine were changed to get full efficiency. Full efficiency. So because of this, we don't get any future benefits. That's why we treat it as revenue expenditure. Suppose if you change any part of the engine which gives fuel efficiency, not full efficiency, fuel efficiency, then that can be treated as capital expenditure. But it is just to get the full efficiency, we have changed the rings and pistons because this part is worn out and every time we have to change. That's why it is treated as revenue expenditure. Next one, legal fees paid to acquire a property. Generally, at the time of purchase of property, we have to register that property on our name. So, whatever the legal charges or stamp duty or whatever the amounts we have paid to the government, so all these are treated as capital expenditure. All these are treated as capital expenditure. Get students? So, legal fee paid to acquire a property, part of cost of the property, and it is treated as capital expenditure. Next one. Look at the next question. Subsidiary books. Our next concept is on subsidiary books. Look at prepare sales book. They are asking to prepare sales book. Which transact first of all, which let me know which transactions are recorded in sales book. Only credit sale of goods. Only credit sale of goods. Cash sales of goods not recorded in the sales book, and sale of any other assets also not recorded into this book. Yes or no, students? So keep this thing in your mind and follow. Sales book of Mrs. Alpha of Kanpur for March 2024. Here they have given total 4 transactions. Here they have given total 4 transactions. Students, observe carefully. First one, March 5th. Sold to Messrs. ABC 10 pieces of chairs, 5,000 each, less trade discount to 5%. So, first, how many pieces we have sold? 10. 10 into 5,000 is 50,000. 50,000 minus 5%. 50,000 minus 5%, 1,250 deduct, and remaining amount is shown on the outer column. Look at 2,500, 50,000 into 5%, 2,500. So first we'll draw the format like this. Sales book of Mrs. Alpha for March 2024. So date, particulars, gross amount, trade discount, net amount. Or sometimes you may draw simply gross amount column, details column, and the trade discount we deduct in the details column itself, and the outer column we transfer the net amount. Look at first one, March 5th. So simply here we write the name of customer Messrs. ABC, and we also write the goods which we have purchased, description of the goods which we have purchased. 10 pieces of chair set, 5,000 each, less trade discount 5%. What is the gross amount? 50,000. Trade discount 5,000, 5% on 50,000, 2,500. Remaining amount 47,500. The net amount payable to, sorry, net amount receivable from ABC. Next one, March 12th. Sold to Messrs PQR 25 pieces of tables. Table is also furniture. If you observe, there's furniture. Okay, that means his business is, their business is furniture business. Their business is furniture business. 25 pieces of tables, 2000 each. Total amount 25 into 2000, 50,000 rupees. Each less trade discount 10%. So 50,000 minus 10%, 5,000 rupees trade discount. Outer column 45,000. So carefully. So March 12th, Messrs PQR 25 pieces of tables at 2000 each. So total gross amount 50,000, count 5,000, remaining amount 45,000. Next one, March 18th. Sold to Messrs MTB 5 pieces of recliner chairs. It is also part of furniture at 11,000 each, less trade discount 10%. Payment received through cash. So immediately after sale of these recliner chairs, we received cash. You tell me, is it credit transaction or cash transaction? Is cash transaction. So cash transactions are not entered into the sales book. Yes or no, students? So this transaction is ignored from sales book, but this transaction is recorded in cash book. This transaction is recorded in cash book. Next one, March 28th. Sold to Messrs LMS 50 pieces of cupboards. Cupboards also part of furniture at a 10,000 each, less trade discount 20%. Now 50 pieces into 10,000 each, 5 lakhs minus 20%, 1 lakh. So outer column we write 4 lakhs rupees. Look at 28th date. Messrs LMS 50 pieces of cupboards at 10,000 each, less trade discount 20%. Gross amount is how much? 5 lakhs. Discount, trade discount 1 lakh. Outer column 4 lakhs. Now look at the total amount. 4 lakhs plus 45,000 plus 47,500. Total 49,000. 4 lakh 92,500. Now here we have to write a note point that transaction dated on 18th March not recorded into this book. Why? Because it is cash sales. Yes or no, students? So this is our subsidiary book problem. So sometimes they may ask a problem from subsidiary books or cash book, because cash book is also part of subsidiary book. Yes or no, students? Either they may ask purchase book or sales book, or sometimes cash book. Next one, rectification of errors. Yes, this is important. This is important. Look at, students. Mr. Satvik was unable to agree the trial balance last year. Trial balance last year means is it stage 1 or stage 2 or stage 3? Stage 1 nothing but before preparation of trial balance. Before preparation of trial balance. Stage 2 nothing but after preparation of trial balance but before preparation of final accounts. Stage 3 nothing but after preparation of final accounts. That means we are identifying and we have located and rectifying the errors in the next financial year. Yes or no, students? Now look at, so this is under stage 3. When you are solving, when you are rectifying errors in stage 3, all the nominal accounts, in the place of nominal accounts we use the account profit and loss suspense account. Profit and loss suspense account. Yes or no, students? So this is the care you have to take. And wrote off the difference to the profit and loss account. Observe carefully. Last year we have a difference in trial balance. Generally, the difference in trial balance is transferred to the suspense account. But here what happened? The difference in trial balance is transferred to profit and loss account. The difference in trial balance is transferred to profit and loss account. That means in the next financial year, if you open suspense account to record the entry, you don't find any opening balance in the suspense account. This is the care you have to take of that year. Next year, he appointed a chartered accountant who examined the old books and found the following mistakes. Now look at one by one mistake. First, visualize what is the how you rectify these errors under stage 2. Stage 2. After that, you convert it into stage 3. In stage 2, if you find nominal accounts, we use nominal accounts. But in stage 3, if you find a nominal accounts, in that place we use profit and loss suspense account. Yes or no, students? Look at purchase of a scooter was debited to conveyance account. How do you rectify this normally? Now we debit scooter account or motor vehicle account, we credit a conveyance account. So scooter account debit to conveyance account. This is how we write. How much? 30,000. If you rectify this in the previous year, we write this entry. Scooter account debit to conveyance account 30,000. Mr. Ratan charges 10% depreciation on scooter. So suppose if you have rectified this error in the previous year, then we also charge the depreciation. For that, what is the entry we record? Depreciation account debit to scooter account. So scooter account debited 30,000 and credited 3,000 rupees. Credited 3,000 rupees for depreciation. So finally, scooter account shows 27,000 rupees in our books of accounts for the next year. Now, when you are rectifying the same in the next financial year, we bring the scooter at 27,000 rupees, not at 30,000. Because if you debit 30,000 rupees, again you have to charge 3,000 rupees depreciation in the last year. So that what we do, we debit directly 27,000 rupees scooter account to conveyance account 27. But in the place of conveyance, we use profit and loss adjustment account. Okay, students. So scooter account debit to profit and loss adjustment account 27. Next one. The total of return inward book. Return inward book means sales returns book. For July 2024, 12,400 was not posted to the ledger. So sales returns book totaled 12,400. We forgot to post into the sales returns account debit side. What about other postings? Yes. From whom goods received, we posted onto their account. Yes or no? Now sales returns account debited. Normally, how do you rectify this? Sales returns account debit to suspense account. But here we are rectifying the errors in the next year. So we debit a P&L adjustment account. Finally, what is the entry we record? P&L adjustment account debit to suspense account 12,400. Is it clear? You may ask, the suspense account is not created earlier, na? Yes. But to complete the rectification entry, we are using suspense account here. That's it. Next one. A credit purchase of goods from Mr. X for 20,000 was entered as sale. We have purchased goods from X, but it is entered as sales. Now, how do you rectify normally? Simple. Purchase account must be debited. So, purchase account debit. A minute. How do you rectify normally? Tell me. Purchase account debit. Sales account by mistake credited. Na? So, sales account debit to from whom we purchased? From X we have purchased. So, to X account. Purchase account 20,000. Sales account 20,000 and X account 40,000. This is how we rectify the error. But here if you observe purchase and sales both are nominal accounts. This place we use the account profit and loss suspense account debit to X account. Is it clear, students? Look at profit and loss adjustment account debit to X account 40,000. Next one. Receipt of cash from Mr. Pritish was posted to the account of Mr. Ravish 10,000. Normally, what is the entry for receipt of cash? Cash account debit to Pritish account. So Pritish account must be credited. But by mistake, we credited Ravish account. How do you rectify this? Now Ravish account debit, Pritish account credit. So Ravish account debit to Pritish account 10,000. I hope you are following, students. Next one. Receipt of cash from Mr. Chandu. Normal, what is the entry we record? Cash account debit to Chandu account was posted to the debit of his account. Actually, we have to write credit side of his account 5,000. Credit side of his account 5,000. But by mistake, we have written on the debit side. Now, how do you rectify? By crediting Chandu account by 10,000 rupees. So, what is the entry we record? Suspense account debit to Chandu account 10,000 rupees. Observe carefully. Is it clear, students? Next one. While carrying forward the total in purchase account, while carrying forward the total of purchases account to the next page, 55,950 was written instead of 65,950. Actually, purchase account, one page total. We have to write how much? 55,950 is the correct amount you have to write. But by mistake, how much amount you have written? 55,950. So you have written 10,000 short. Now what we do? We simply debit purchase account with 10,000 rupees. Is it or not? Yes. Normally, how this entry gets rectified? Purchase account debit to suspense account. By debiting purchases account and creating suspense account, we write the rectification entry. But here purchase account is nominal account. So in that place, use profit and loss adjustment account. But by mistake here, they have debited purchase account in the place of purchase account. Actually, this entry is not correct. So what is the entry we record? Profit and loss adjustment account debit to suspense account. To suspense account. Is it clear, students? Yes. Next one. Sale of goods to Mr. Rohan for 20,000 was omitted to be recorded. Sale of goods to Mr. Rohan for 20,000 rupees was omitted to be recorded. How you record? Normally, what is the entry we record? Mr. Rohan account debit to sales account. But in that sales account place, we write Rohan account debit to profit and loss adjustment account. Is it clear, students? Next one. Freight paid on a machine 5,600 was posted to the freight account as 6,500. Generally, freight paid on a machine is must be debited to machine account 5,600, but it is wrongly debited to freight account 6,500 first. Cancel freight account with the 6,500 first. Yes. Now debit machine account with 5,600. So how this gets rectified? Machine account debit 5,600 to freight account 6,500. There is a difference of 900 rupees. We write suspense account. But here freight is nominal account. In this place we use now profit and loss adjustment account. So finally, how do you rectify this? Machine account debit 5,600, suspense account debit 900 to freight account 6,500. These two P&L suspense account adjustment account 6,500. Look at students. Machinery account debit, suspense account debit to profit and loss adjustment. Now, after completion of all rectification entries, try to prepare P&L adjustment account, students. Try to prepare P&L adjustment account. P&L adjustment account. Look at the first entry. Yes, first one P&L adjustment account, credit 27,000. So here I am preparing profit and loss adjustment account. So it is suggested to prepare you people also profit and loss adjustment account in the exam. So profit and loss adjustment account, here credit 27,000. Next here debit 12,400. Next here also debit 40,000. Next entry, no entry. Yes, P&L adjustment to suspense debit 10,000. Next credit 20,000. Credit 20,000. Next one credit side 6,500. 11,500. Next one, debit 11,100. 11,100. Next one, that's it. Yeah, that's it. Look at, sorry, this 11,100 not posted. No? Finally, we have to post. That's it. Now look at, so this after posting all the rectification entries into this P&L adjustment account, it shows like this. Now balance this 27,000 plus 20,000 plus 6,500, total 53,500. Okay, debit side 12,400 plus 40,000 plus 10,000, 1,400. Observe just a minute. Yeah, here they have committed one mistake. No, 10,000 they have credited. Okay, so what is the difference we get? Difference is 52,400 minus 53,500, 8,900 rupees. 8,900 debit balance more or credit balance more? So P&L adjustment account debit to, sorry, debit side is more now. So capital account debit to P&L adjustment account. So 8,900. 8,900. So carefully. So 8,900 rupees debit balance now. So how we record the entry? Observe this. This entry must be reversed. This entry must be reversed with 8,900. 8,900 students. Observe carefully. Because P&L adjustment account is showing debit balance more now. So now we credit. This is transferred to capital account. So what is the entry we record? Capital account debit. Satvik capital account debit to profit and loss adjustment account 8,900. Make a small correction. Next, we also prepare suspense account students. So here actually bifurcation I have to write, but I have written total amount. Don't worry. Okay. Now look at suspense account. So it is suggestible to prepare profit and loss adjustment account at the same time suspense account also students. Look at. So from the beginning, observe. So first entry, no suspense account. Second entry, yes, we have suspense account. Suspense account is credited on the credit side 12,400. Next one, yeah, suspense account debit 10,000. Next one, yes, here also suspense account credit 10,000. Next one, eighth entry, we have suspense account debit 900. Suspense account debit 900. Next one, that's it. Okay, now balance suspense account. Credit side 22,400 minus 10,900. 22,400 minus 10,900. Difference is 11,500 students. Here suspense account is showing credit balance. If you observe at the beginning of the problem itself, they said previous year whatever the suspense account balance we have, that is transferred to the profit and loss account, and don't consider this 11,500 as opening balance. Don't consider this 11,500 as opening balance students. Is it clear? So now this difference of 11,000 also transferred to the Satvik capital account. What is the entry we record? Suspense account is showing credit balance now. So suspense account debit to Satvik capital account 11,500. Observe, suspense account debit to Satvik capital account. Write down more one. Yeah, 11,500. Entry correct. Suspense account debit to Satvik capital 11,500. That's it. Is it clear, students? So this is a small correction in the answer. You try to correct it. Next one, bank reconciliation statement. This is also one of the important chapter, students. Look at bank reconciliation statement. From the following particulars of Messrs. Iqbal Enterprises, prepare a bank reconciliation statement. Okay. Bank overdraft as per passbook as on 31st 2024 was 8,800. So here we have overdraft, student. I always suggest to the student to prepare a small working note. A small working note. What is that? First, you write down here cash book and passbook. Now, in this problem, what we have? We have OD, overdraft. Don't forget we have overdraft. Now observe the problem. First one, okay, anyway, this is overdraft balance. So how it is shown in the problem? So bank overdraft as per passbook. Bank overdraft as per passbook, or the same can be called unfavorable balance as per passbook, or debit balance as per passbook. Now we start our problem. Look at. So what is the heading we write? Bank reconciliation statement as on 31st March 2024. Particulars amount. Overdraft as per passbook 8,800. Now look at. Look at one by one transaction. Checks deposited in bank for 5,800. Total we have deposited checks into bank. Who will record the transaction first? Cashier. We record that means cash book. We record the entry first. So with this amount, automatically our overdraft gets decreases. Overdraft gets decreases. Yes or no, students? Cash book overdraft gets decreases. Cash book overdraft gets decreases. But whereas only 2,000 were cleared till 31st March. How much amount is credited into bank? 2,000. So in the bank overdraft also decreased, but how much? 2,000 only. So here what is the difference you get? 3,800 rupees. So compared to cash book and passbook, our cash book overdraft gets decreases, whereas passbook overdraft gets increased by how much? 3,800. Is it clear, students? Next one. Checks issued were 2,500, 3,800, 2,000. Total how much? 2,500 plus 3,800 plus 2,000. Total 8,300 rupees worth of checks we have issued. Who will record this transaction first? Cash book. So in cash book we record this transaction. So automatically our overdraft gets increases. Yes or no, students? Yes. Look at. During the month, okay, the checks of 5,800 is still with the supplier. Means total we have issued 8,300, but out of them only 5,800 checks are still with the supplier. That means only 2,500 worth checks are cleared. So what is the difference here? We have 5,800 rupees difference. So when you compare cash book balance with passbook, cash book overdraft increases, but whereas passbook overdraft by how much? 5,800 only. Okay, next one. Dividend collected by bank 1250. Okay, so who will record this transaction first? Passbook. So passbook overdraft gets decreases. Passbook overdraft gets decreases, na? Yes. Was wrongly entered as 1520 in cash book. The same transaction we also entered in the cash book. But how much entered? 1520. So what is the difference here? 1520 minus 1250, 270 rupees difference. So when you compare cash book and passbook, automatically cash book overdraft gets increases, whereas passbook overdraft gets. Observe, students. This transaction is recorded in both books, but in cash book they entered 1520, but in passbook they entered 1250. So the difference 270. Okay, next one. Corporation tax 1200 paid by bank as per standing instruction. First, who will record this transaction? Bank directly. So this is a payment. This is a payment so that bank overdraft gets increases. This is the payment so that bank overdraft gets increases by 1200 rupees. Appears in passbook only. That means there is no record in the cash book. So cash book overdraft decrease. Then you compare cash book and passbook. Na passbook shows 1200 more, means overdraft 1200. Next one. Interest on overdraft 930 was debited by bank in passbook. So who will record this transaction first? Bank will record this transaction first. So in the bank, overdraft gets increases by how much? 930. Simple, students. Next one. And the information was received on 3rd April. But on what date we are preparing this BRS? 31st March. 31st March. Now look at. So, but in the cash book there is no entry, so that overdraft gets, because no, there is no entry, no, so that my overdraft gets decreases. Next, direct deposit by Messrs. Rajesh Trader 400 not entered in cash book. First of all, who records this entry? Passbook. So that passbook overdraft gets decreased. Why? Because it is deposit, no? With the deposit, our overdraft gets decreases. How much? 400. 400. Now, but no entry in cash book, so that cash book overdraft. Amount transferred from fixed deposit account into the current account 2000 appeared only in passbook. We have fixed deposit in the bank, that is transferred to the current account. That means our cash book, first who will record this transaction? You will tell me. Passbook. So overdraft gets decreased. But the same is not entered in cash book, so that overdraft in. That's it. This is our working note. This is our working note. Now, first observe which book you have taken as starting point, means passbook. Passbook is our starting point. Yes or no, students? Now you need which book balance? Cash book balance. You need which book balance? Cash book balance. So whatever the symbols we have assigned for cash book, you just follow those symbols. You follow these symbols, students. Decrease means minus, increase means plus. Decrease means minus, increase means plus. So look at, accordingly they did the same. So you can check the answer. Observe. So here what are the plus symbols we have assigned? Is minus symbol, is plus symbol, is also plus, is minus, is minus, is plus, is also plus. Observe, total 1, 2, 3, 4. Here a minute, what happened here? 5800, 2400, 5800. Yeah, here observe, students, one small correction. In the cash book, how much amount recorded? 15. The cash book, how much amount recorded here? 1520, na. So this is dividend collected, na. Our overdraft gets decreases. Our overdraft gets decreases. One small correction. Our overdraft gets decrease, whereas passbook overdraft gets increase. We recorded 1520, so overdraft decreased by 1520. But in the passbook they recorded 1250, overdraft decreased by 1250. So what is the difference? 270. So here it is minus. Here it is. So 3 plus 3 amounts you add 5800 plus 400 plus 2000, remaining amounts minus. So accordingly you can check this, students, or no. So finally we get the overdraft of 1800. Is it clear, students? Next one, valuation of inventories. Next one, valuation of inventories. Here if you observe, from valuation of inventory they have given two problems. One is closing stock valuation by following FIFO, LIFO, weighted average, like that. Next one is adjusted selling price method. Next one, adjusted selling price method, student. So first we look at 6a. The following are the details of material inventory bought and used by manufacturing company. Generally, this technique we follow when we have a proper record system. That too, when inventory is ordinarily interchangeable. When inventory is ordinarily interchangeable, then we follow this method. That too, we need stock records. So look at the first one. 110 2021 balance opening inventory. Okay. 110 2024 material bought, that means purchases 200 units, 60 per unit. Next one, 2nd October issued for use 100 units, price they didn't give, we have to apply the price. 3/10/2024 material bought again. 3 4/10/2024 issues. 7/10/2024 issue. Look at the end. You are required to calculate the value of inventory material as on 7/10/2024 by applying weighted average method. Which method they are asking? Weighted average method. Which method? Weighted average method. Under weighted average method, what we do? Total value of stock. We apply the formula total value by total quantity. Total quantity. Total value by total quantity. This is the formula for value issue price. This is the formula for issue price. Yes or no, students? Yes. First, we draw the format. Look at for the heading calculation of value of inventory as on 7/1/2024 of manufacturing company. Observe normally how we draw the format. Date, and above this we draw a format like this. Okay, here we write receipts and issues and balance. Yes or no, students? But here they have written directly. Here they have written directly receipt, rate, amount. Normally here we write quantity, here also issue quantity, here also balance units quantity. So you may follow this format also, no problem at all. Now first transaction is balance. So directly we write the quantity in balance column, but here we don't have any balance. Next one, purchases. Look at how many units we have purchased. 200 units, 60 per unit, total 12,000 rupees. So purchased 200 quantity, price is 60, total 12,000. Now write down the same in the balance column. 200, 60, 12,000. Next one. Next transaction is issues. So second 10 issues. Now issues we write in issue column 100 units. You observe we have only one lot of goods. Now we are issuing out of them, so that we apply same price 6 rupees. Total 6,000. Now what are the balance goods left? Balance units left. Previously we have 200. Now we issues 100. Balance left 60. Previous price 60. Now also 60. So 60 total balance of goods 6,000. Next one. 3rd October material bought. We have purchased material. Look at. So this we record in receipt column. 3rd October. How many units purchased? 400. Issue price, sorry, receipt price 80. Total 32,000. Now when you are writing balance, please check that previous how much quantity we have 100. Now purchased 400. Add total quantity 500. Add total quantity 500. Next one. Previously balance how much? 6,000. Previous balance how much? 6,000. Now purchase value how much? 32,000. Total amount 6,000 previous balance and 32,000 purchased amount. Total amount 40,000, 38,000. Total amount 38,000. Now if you want to get the price, weighted average price, then total amount. So here I am writing total amount 38,000 divided by total quantity 500. Observe. Total amount 38,000 divided by total quantity 500. We get 76 rupees. We get 76 rupees. Observe, students. 76 rupees. So that price we write. That price we write. Okay, 76 rupees. Now immediately if you issue the goods, we apply 76 rupees. Yes or no? Next one. Next 410. Issue issued for use 200 units. Issued for use 200 units. So we write the same in issues column 200. Before issue, what is the price we have? 76. Now we apply the same 76. Amount 15,200. While you are writing balance, take care. 1500 earlier units. Now we issued 200. Remaining balance left 300. Earlier price same 76 rupees. Now we write 22,800. Next one 710 also we issued 200 units. Same we write in issues column. 710. How many units issued? Before this, how much price we have? 76. So 200 into 76, 15,200. Now how many units left? Previously we have 300 minus 200, 100 units left minus into 76. So total price 7,600. Now as on 7 January 2024, we have 100 units of inventory of 7,600 value. Yes or no? This is our answer. Okay. Simple problem. The value of 100 units of inventory as on 7/10/2024, 7,600. That's it, students. Next one. Look at the B problem. This is adjusted selling price, student. So normally adjusted selling price problem, they give you this type of problem, or we have one another model of problem. Look at first this. From the following information, calculate the historical cost of closing inventories using adjusted selling price method. Normally, in some businesses, at the end of the year, we value the closing inventory at selling price. At selling price, because sometimes it becomes difficult to value the inventory at cost price, and this method is usable in retail industry. In retail industry, now normally closing stock is at what price? Selling value. Closing stock inventory is at selling value. Selling value consists of what? Profit margin. So from the selling price, if you can deduct profit, from the selling price, if you can deduct the profit, then you get cost. This is the technique behind adjusted selling price. Now the closing inventory is at selling value. Out of that we deduct profit, so that we get what? Cost. Now here the question comes, how much is profit margin? How much is profit margin? So this we need to find out. Observe carefully. Profit is equal to, that means percentage of profit is equal to profit divided by sales. Profit divided by sales into 100. Yes or no? Sales we get in the exam, that means problem, but you don't get profit. Now you need to calculate profit. Look at first one. Closing stock. Closing stock we have at selling price. We have at selling price. From selling price, if you can deduct, then you get cost price of closing stock. This is the idea behind the adjusted selling price. But here the problem comes. What about the profit margin? Now to calculate profit margin, we have a formula, that is profit divided by sales. Profit divided by sales into 100. Yes or no, students? Now the question comes, how much is profit? Profit we have formula sales minus COGS. Yes or no, students? Sales minus COGS. Yes, sales we get minus COGS formula, opening stock plus purchases minus closing stock. Minus closing stock. But here, if you observe, we get all the information: sales, opening stock, purchases. But here the closing stock is at what price? Selling price. Here the closing stock is at what price? Selling price. Now what we do is, for the sales, we add this closing stock also. For the sales, we add this closing stock also. How, sir? Look at sales minus into minus closing stock plus closing stock, closing stock minus opening stock minus purchases. Observe, students. Generally, closing stock must be at what value? Cost value. But here closing stock we have at what value? Selling value. That's why what we are doing is, we are assuming that if these goods were also sold, then what is the total sale value now? Look at sales plus closing stock. Is it clear? Minus opening stock minus purchases. This is the formula we use. we get profit by by using this formula we get profit, and this profit is substituted into percentage of profit formula, then this percentage is applied on here. This is the logic behind adjusted selling price. Now look at the problem. Purchases during the year 10 lakhs, sales during the year 15 lakh, opening inventory nil, closing inventory at selling price 2 lakhs. Simple. Now I have explained the formula. Now just you substitute. Sales is how much? 10 lakhs. Sorry, sales how much? 15 lakh. Sales 15 lakh. Less closing inventory also we have at selling value. Closing inventory also we have at selling value 2 lakhs. Minus opening stock how much? Nil, 0. Minus purchases how much? 10 lakhs. 7 lakhs is our 7 lakhs is our profit. Yes, sir, no, students. Now this profit apply here. This profit apply into this formula. So 7 lakhs. This 7 lakhs profit we got at what sales? Not only at 15 lakhs sales. To this 15 lakh we also added 2 lakhs closing stock. That's why here you have to write 17 lakh. Okay. So how much percentage you get? 7 lakh divided by 17 lakh. You get almost 41.176%. Or round off you can take 41.18%. Now apply this onto this formula. So what is the selling value of closing stock? 2 lakhs. What is the selling value of closing stock? 2 lakhs minus, apply this formula, 41.18%. 2 lakhs minus 41.18%. So you get directly 1,17,640. This is the closing stock. This is the closing stock value. Observe, students. This is very, very logical. If you can understand the logic behind this, then you can solve this type of problem, any problem. Okay. Now look at the answer. Yes. There we followed formula approach, the same they have given as statement approach. Look at first sales. Here we have added sales 15 lakh plus closing stock. We added now total 17 minus opening stock minus purchases. So here also minus cost of goods available for sale. You get gross margin 7 lakh, and this 7 lakh is applied to calculate rate of gross margin. 7 lakh divided by 17 lakh, 41.18% approximately. Then this percentage is applied on closing stock. So cost of closing inventory is equal to 2 lakh less 41.18%. Now 1,17,640 is your closing inventory. Yes or no, students? Yes. So here we have rounded off, or you can take 41.176% is also almost you get 1,17,640 rounding figure. So that is what they have given here. Is it clear, students? It is very, very easy problem once you understand the logic. Clear, everybody? Yes. Now look at the next question. Depreciation and amortization. Next question, depreciation and amortization, student. Depreciation and amortization. Look at, this is also very important question. Messrs. Deep Lakshmi purchased a second-hand machine on 1st April 2020. Here, when you are solving depreciation problems, first check for how many years you need to prepare this machinery account or depreciation account, whatever it may be. Here they said prepare machinery account firm for the years 20 to 24, means 2020, 21, 22, 23, 24. For 4 years you have to prepare. Okay, that means this is 1st April 2020 na, ending 21, 21, 22, 23, 24. For 4 years you have to prepare the machinery account. Sir, no? Yes. Now at the time of preparation of machinery account, first identify the financial year, one financial year. Let us say, for example, here we have 1/4/2020, and this ends on, they said the financial year ending Yeah, first read the problem, then we can understand. 1st April 2020 for 1,60,000. Overhauling and erection charges amounted to 40. Now, what is the total machinery cost? 2 lakhs rupees. Another machine was purchased for 80,000 on 1st October 2020. Fine. On 1st October 2022, the machine installed on 1st April 2020, that's the first machine, 2 lakhs machine, was sold for 1 lakh rupee. At the time of sale of machine, we need to calculate three things. 1. Sale value. 2. Depreciation till sale. 3. Profit or loss on sale of the asset. These three we need to calculate. Next. Another machine for 30,000 was purchased and was installed on 31st December 2022. We sold on 1st October and we purchased again another machine on 31st December. Under the existing practice, the company provides depreciation at 10% per annum on original cost. Normally, they are charging depreciation on original cost. However, from 1st April 2023, it decided to adopt WDV method. Means earlier they prepared, followed original cost method. Now they are following WDV method. Now they are following WDV method. That means it is change in the method of depreciation. Change in the method of depreciation. When the method of depreciation has been changed, then there are two possibilities. One, the change may be taken from the retrospective effect, means from the date of purchase of asset, or simply we can change the method from the year itself. That means without any retrospective. Here they said on what date we have changed the method from 1st April 2023. That means till 31st March 2023, they followed original cost method or straight line method, and to charge depreciation at 15% per annum. Earlier, what is the rate of depreciation? 10%. Now, what is the rate of depreciation? 15%. You are required to prepare machinery account for the years 20 to 24. Means here they didn't say on what date we are closing the books of accounts. But they have given a hint. What is that hint? What is that hint? 1st April. What is that hint? From 1st April 2023 onwards, they have changed the method of depreciation. This is the hint we have in the problem to identify the financial year. Now, you people tell me what is the financial year they are following? 1st April to 31st March. Here, total how many financial years you have? Total how many financial year you have? 1 4 2020 to 31 3 2021. Next, 21 22, 22 23, 23 24. Out of that, from 23 24 onwards, they have changed method of depreciation. That means for the 3 years they followed original cost. And when you are writing entries, write chronologically. Now first look at one financial year, 1 4 2020 to 31 3 2021. In this financial year, what happened you identify. During this financial year, what happened you identify. What happened during this financial year? 1 4 2020 we purchased asset, and during this year no more transactions, so directly calculate depreciation on 31st March 2021. Yes or no, students? Yes. Now come to second year. What happened in 2021-22? Observe carefully. We sold asset on 1st October 2022. That means nothing happened in 21-22. Nothing happened in 21-22. Observe carefully. Yeah, 21-22 means 1st April 21 to 31st March 22. So directly you can calculate depreciation on 31st March 2022. Now come to 22-23 financial year. 22-23 financial year. What happened? You divide the problem like this. 22-23 financial year, what happened? On 1st October 2022, we sold one asset. We sold one asset. Next, on 31st December 2022, we purchased another asset. These are the transactions happened. Now, on 31st March 2023, calculate depreciation. Like this, you analyze the transactions into year wise. That's why I said first identify for how many years this asset account must be prepared. Is it clear, students? I hope you understood this concept. Now look at, now here total how many machines you have. Here total how many machines you have. If you observe, we have three machines now. Yeah, so I forgot to discuss this. 1st October 2020. 1st October 2020, we have purchased another machine. 1st October 2020 means in the same financial year. The first financial year itself, we have purchased two assets. Sorry, I forgot this. Next one. So total how many machines we have? Machine 1, machine 2, machine 3. So when you have these many machines, it is always suggestible to prepare one working note for calculation of depreciation. Yes or no, students? So here our planning for solving this problem is machinery account, and working note to calculate depreciation. At the same time, on the at the date of sale of asset, we also calculate profit or loss. Is it clear, students? Now look at the next one. So observe this now. Yes, machinery account in the books of Messrs. Deep Lakshmi. Machinery account in the books of Messrs. Deep Lakshmi. First, here observe the financial years 1 4 20 21 21 22. Next, 1 4 23 24 22 23 to 23. One more financial year. So total four financial years. Look at one by one. This is a little bit lengthy problem, student. This is little bit lengthy problem. Observe carefully. Transaction wise. First we have purchased asset. First we have purchased asset. So for that, what is the entry we record? Machinery account debit to bank 1 lakh 60. After that, we have paid some overhauling expenses or something, repairs, something. So to bank account again. So total asset value how much? 40,000. In the same financial year, we have purchased another asset on 1st October. So to bank 80,000. So total we have two machines now. At the end of the year, we have to calculate depreciation on two machines. For that, we have working note. Observe carefully. We have working note here. Yeah, under straight line method. Machine 1, machine 2, machine 3. First cost, machine 1, machine 2. Next depreciation for 2021. Machine 1 we have purchased on 1st April, so that we calculate for full year. Full year. Machine 1 full year. How much? 2 lakhs into 10%, 20,000. But second machine we purchased on 1st October. So from 1st October to 31st March, 6 months. So on second machine we calculate depreciation for 6 months. So 10% into 6 by 12, 4,000. So for the first year, what is the total depreciation? 24,000. So credit depreciation 20,000 plus 4,000, total 24,000. Is it clear? Now balance. Debit side 2 lakhs plus 80,000, 2 lakh 80,000 minus 24,000, balance is 2 lakh 50,000. Balance 2 lakh 50,000. Is it clear, students? Now the same is carried forward to the next financial year, that is 1 4 2021, to balance 2 lakh 56. Now if you observe 2021-22, no transaction happened. No transaction happened. Now directly we go to the year end, 31st March 2022. Depreciation. First asset value is how much? 2 lakhs. 2 lakhs into 10%, 20,000. Second value of asset 80,000. 80,000 into 10%, 8,000. So second year depreciation 28,000. 2 lakh 56 minus 28,000, balance 2 lakh 28,000. Yes or no, students? Yes. Next one. Now this balance is carried forward. This balance is carried forward. Okay. So 1 4 2021, to balance BYD 2 lakh 28,000. Here. Now 22-23, what happened? 22-23 financial year, we have sold one asset and we have purchased another asset. First we see the asset which we have sold. So I said three things we have to do at the time of sale of asset. First one, sale value. So what is the sale value of asset? 1 lakh. 1 lakh. What is the entry we record? Bank account debit to machinery account. So machinery account credit 1 lakh. Now till the date of sale, when we have opened the books of accounts 1st April till the date of sale. What is the date of sale? 1st October. 6 months. So we have to calculate depreciation. So 2 lakhs into 10% into here. 2 lakhs into 10% into 6 by 12, 10,000 rupees. Now calculate profit or loss. Observe students, what is the book value of asset now? Here we have calculation problem. Yes. This is the original cost of machine till date. Till date, how much depreciation provided? 20,000 first year, 20,000 second year, 10,000 for the third year. Total 50,000 depreciation provided. 2 lakhs minus 50,000. The WDV or book value of the asset is 1,50,000. Book value of the asset is 1,50,000, but it is sold for 1 lakh, so 50,000 loss. For the loss, what is the entry we record? Profit and loss account debit to asset account. Yes or no? So observe carefully. Asset account credit side. Asset account credit side by profit and loss account. Loss on sale of asset. Over. This is very important aspect. This is very important aspect. Next one. On 31st December, we have purchased one asset now. On 31st December, we have purchased one asset. For that, what is the entry we record? Machinery account debit to bank account. Machinery account debit to bank account 30,000 rupees. Machinery account debit to bank account 30,000. Now 22-23 financial year completed. 22-23 financial year completed. Now we calculate depreciation. We have second asset and also now we have third asset. So second asset value how much? 80,000. 80,000 into 10%. Third year we have for full year. So 8,000 rupees depreciation we calculate. Now come to third asset. Third asset value is how much? 30,000. And this is purchased on 1st December, 31st December. So we calculate depreciation for 3 months into 10%. How much we get? 30,000 into 10% into 3 by 12. Total 750. 750. Is it clear, students? Yes. Next one. Next one. So this year completed. So total depreciation for year 3. Total depreciation for year 3, 10,000, 8,000, 750. Total 18,750. Observe carefully. 18,750. Now balance the account. You get 89,250. Okay. Now this is carried forward to the 1/4/2023 last year. Last year. Is it clear, students? Yes. Now 23-24 financial year, what happened? There is no transaction because no purchase of asset, no sale of asset. But from 1/4/2023, we have changed our method of depreciation. From 1/4/2023, we have changed our method of depreciation. Yes or no? Yes. Now, now, now identify on 1/4/2023 what are the book value of asset. What are the book value of asset or WDV of the asset? Yes. We have two machines. So second machine WDV 60,000, third machine WDV 29,250. Now for the fourth year, we calculate depreciation on 60,000 and 29,250. On 60,000, 15%, on 29,000, 15%. So how much we get? 60,000 into 15%, 9,000. 29,250 into 15%, 4,387.5. Total depreciation for fourth year 13,387 point is the total depreciation for year 4. Get students? Yeah. Total depreciation for year 4 13,387.5. Now 89 balance this account 89,250 minus 13,387.5 balance you get 28.78,860. This is our depreciation problem, student. This is our depreciation problem. Is it clear? So this RTP January 2025 is going to be in two parts, students, due to time constraint. So I am uploading this video now, and within few hours or within next day I will upload part 2 also. Hope you understood. Thank you, students.